Hi, good morning, everyone. Welcome to our Phillip Securities Research morning call for 22nd January. For today, we have stock counter update for US banks, namely JP Morgan, Bank of America, Citigroup, as well as Wells Fargo for their results. For technical analysis, we have S&P 500 as well as Genting Singapore. And for our macros and sector outlook, we'll have FAANGM Monthly and Singapore REITs Monthly for December. And we also have our Singapore Weekly for week 4. So without further ado, let me hand over the time to Ambrish to get us started on the FAANGM Monthly. Thank you.
Thank you, Zain, and good morning, everyone. So let's start with FAANGM Monthly for the month of December. Next slide, please. So in terms of performance for the FAANGM as a whole, it was a bit muted as FAANGM stocks, they rose by about 2%, whereas S&P 500 and Nasdaq 100 was up by about 4% and 5% respectively. However, for the full year 2023, FAANGM, they were significantly up and they provided a return of about 62% as compared to 24% for S&P 500 and 54% for Nasdaq 100. And we believe that the significant gains, they were mainly because of like the inflation, it came down, then the AI hype, and also most of the companies, they have reported earnings expansion. So in terms of the individual counters for the month of December, Meta was the biggest gainer. It was up by about 8%. And we believe that it was mainly because of continued earnings momentum as well as the recovery in its digital advertising services towards the beginning of the fourth quarter. Oh, sorry, beginning of the December. Then MSFT, Microsoft, it was the biggest laggard and it was down by about 1%. And we believe that this was mainly because of the investors, they are booking their profits as the stock, it has already run up by about 20% over the last 2 to 3 months. And despite the significant gains for the full year 2023, we believe that the valuations are still attractive for FAANGM, and as they are trading at about 31 times forward PE multiple, as whereas it's a historical 10-year average PE multiple, it is at about 32 times. And we believe that there is still potential for earnings to improve as there is a recovery in cloud spending as well as in digital advertising services and e-commerce growth. So moving on to the news for the individual counters. Next slide, please. Thank you. So beginning with Meta, the Spanish Media Association, they had filed a lawsuit of about 600 million US dollars on Meta. And this is mainly because they believe that the company, it had made a systematic use of the personal data without the consent from users. So basically, in 2023, Meta, it has already paid 2 billion in fines, and we believe that this trend should continue as small organizations, they fight for their fair share in the digital advertising market. However, we think that it should not be a roadblock for Meta, mainly because these fines, they just account for about 1% or lower than that of its, they represent 1% of its total revenue. So it should not be a roadblock for Meta. So moving on to Netflix. In December, Netflix, it unveiled its gaming list for 2024, and it highlighted that there were about 86 games as of the end of 23, and there are still sorry 90 games under development for 2024, and the most anticipated game is the Squid Game. So in 2023, 81 million times the games have been downloaded, and it's up about by 180% year on year. And although these games are free to download and play for ad-free member, whereas we think that the availability of the various type of content on the Netflix platform, it should help to support future price increases and to minimize churn. So overall, for Netflix, we have an accumulated recommendation as we think that it's well positioned and it's the leading on-demand subscription service. So moving on to Microsoft, for Microsoft, there were no major news. So would just reiterate that for the December ended quarter, the company expects its revenue to grow by about 16% year over year. And this would be mainly driven by its two key products, which are its cloud service Azure. It's expected to grow by about 27% year over year. And this is mainly because of the shift of workloads to the cloud. And secondly, the Office 365 platform. So the commercial revenue for Office 365 is expected to grow by about 16% year over year. And we believe that the commercial launch of its Office 365 AI tools, particularly which helps in generating first draft of presentation and content in Word. So it should enhance productivity for its users, and thereby it should boost the demand for its products, and it should continue to grow in double digits for this 2024. So for Microsoft, we have accumulated recommendation. And moving on to Alphabet, so it has agreed to pay 700 million US dollars to the entity as a settlement for the lawsuit which was brought about by 36 US states. And the lawsuit, it basically accused for the Alphabet that it had overcharged its customers some unnecessary fees in its Play Store transactions. And also Alphabet, in December, it has introduced its LLM, large language model, which is called as Gemini, and it's expected to boost its generative AI chatbot, which is Bard. And the Gemini, the first version of its Gemini, it's expected to be available in three sizes, which are Ultra, Pro, and Nano. So Ultra, it's focused on more intense tasks, which requires advanced planning and as well as advanced reasoning. And whereas Nano, it would be installed in the mobile phones, and they basically would help for summarizing tasks and Grammarly. So we believe that the availability of its generative AI Gemini, this should further enhance its or add value to its products like digital advertising and its cloud products. So for Alphabet, overall, we have a buy recommendation. And that's all for me. I would now like to pass on to Helena for Apple and Amazon.
Thank you, Ambrish. But next we're going to be talking about Apple. So Apple is busy ramping up their Vision Pro production ahead of their launch in 24th of February. So in case you don't know what Vision Pro is, it is their new mixed reality headset. So according to Apple, it is a productivity tool and entertainment device. So you can use it to mirror the screen on your Mac. Essentially use it as a portable monitor if you want to multitask. At the same time, you can also use it to run your normal iPhone and iPad apps like FaceTime, photos, movies. It will also provide a very immersive streaming and gaming experience. So according to their CEO, they call it the beginning of a new computing era. So it will be Apple's biggest entry into a new product era for in nearly 10 years. Well, in our opinion, we think, of course, it is definitely a very awesome product, but it is sold at a pretty high price of almost 3.5 US dollar. So we think right now, majority of Apple's revenue still comes from iPhone, almost half of its revenue. So we're a little bit doubtful whether there will be significant revenue contribution from the Vision Pro, given its high price and limited adoption in the near term. We still continue to expect service growth to drive the overall expansion because the product sales recently is remaining quite muted. So overall, we maintain an accumulate recommendation. The last company we're going to talk about is Amazon. So Amazon has announced that it will start incorporating advertisement in its movies and TV series, following what Netflix has been doing to boost its revenue. So this will start in January 23rd. What they will do is they will automatically start streaming the advertisement unless the subscribers opt to pay an extra 2.99 US dollar per month, then they can avoid the advertisement. Another news about Amazon is that they plan to invest 17.9 billion US dollar to boost their cloud exposure. So they will be launching their second AWS infrastructure region in Canada. This will create more than 9,000 jobs in Canada, and it will be the first major cloud service provider to have an infrastructure region in the western part of Canada. So this will provide their customer with more options to run the workload with greater resilience, and also to securely store their data natively in Canada. And of course, the end users will enjoy lower latency. So they claim that their users will have access to all the advanced AWS technologies, including data analytics, security, machine learning, and AI to drive innovation. In our view, because of the Prime Video ad, Amazon could definitely see a boost in margins and revenue in 2024, because we believe advertising remains Amazon's largest growth opportunity, given its ability to effectively use first-party data collected on its platform. So, and right now, advertisement only contribute 8% of the company's total revenue. So there's definitely a lot of growth potential. Okay, so overall, we maintain a buy recommendation for Amazon. Next slide, please. Okay, so to conclude, we remain overweight FAANGM because the fundamental has been improving due to a lot of cost-cutting measures in 2023. The growth have also returned compared to 2022. The forward PE ratio is considered very attractive. It's at 31 times right now compared to the 10-year average of 32 times. We do expect a lot of earning upside for the digital ad and cloud-related companies, though the demand for tech hardware is still remaining quite soft. That would be all from me. Next, I'll pass to my colleague Glenn to talk about US banking.
Thanks, Anna. Yeah, so for US banks, we'll just briefly go through the fourth quarter results as well as the outlook for the 2024. And yeah, so we just don't, just to highlight, we don't really cover the US banks, but I'll just be giving a brief update as well as future outlook. So for the brief update on the fourth quarter, the banks did relatively okay if you remove the one-time cost, which would be, I'll go through more in detail later, but if you remove the one-time charges, the banks actually did pretty okay. I think their core businesses have been showing, have been healthy. So if you look at the net interest income, the JP Morgan shown very good growth at 19%, Citigroup as well, surprisingly 4% growth. However, Bank of America and Wells Fargo dipped slightly by 5%. If you look at their non-interest income or their fee income, it was quite a mixed bag. I think Citigroup performed the worst. So despite the investment banking segment actually improving, I think they were pulled down by their trading and brokerage fees. For JP Morgan, it was largely flat. Bank of America also dipped quite a bit, even despite both their trading and investment banking improving. For Wells Fargo, I think they just were quite well. They did quite well across the board, hence their fee income rose 17%. So for the provisions change, it was largely flat for all the banks except for Citibank. So this is very good news for the bank, means that they're finally managed to lower or control their credit costs and their credit quality. So Citigroup, I think, is the only one that the provisions rose by 1.7 billion. Loans growth was also pretty healthy, from 5 to 17% for Citigroup and JP Morgan. I think only Wells Fargo had a slight dip of 2%. So resultantly, the bottom line I put a pat me, actually this was including the one-time cost. So it declined quite a bit for the bank, except for Wells Fargo, and this was mainly due to these one-time charges. So for the outlook for the banks, you look at the core businesses. For the net interest income, the banks are actually indicating and guiding that this will be growing at a low to mid-single digit for 2024. And this is despite them expecting there will be rate cuts in this year. Mainly, they will be looking at loans growth for 2024, which will boost the net interest income, as well as being able to lower their funding costs by lowering their funding deposit rate. So this will actually sort of make them be able to gain a better interest yield spread, hence a higher net interest income. For the fee income, they're also looking at mid-single digit growth, mainly coming from mostly a recovery in the market activity and a recovery in the investment banking segment. For the provisions, 3 of the banks, so JP, Bank of America and Wells Fargo did say that they will be looking at better credit quality in 2024, so they do expect that provisions will be lowered by quite a bit in this year. However, Citigroup is the only one that said that they do expect an increase in their provisions. Loans I mentioned earlier. So the three core segments for the banks seem to be on a positive note for 2024, hence their PAMI should increase, and it looks quite positive for the banks. Now moving on to the next slide. Yeah, so this is just the one-time charges that the banks sort of had for the fourth quarter of 2023, and it averaged around 3.7 billion for these four banks. So it's quite a large sum. If you look at the red line, that actually showed what the adjusted earnings per share or EPS would be if we remove these one-time charges. So like Wells Fargo and JP did quite well. There was an increase, but Bank of America didn't do as badly, but they still beat expectations. And Citibank, of course, actually made a profit if you remove these one-time charges. And I think the constant in these charges would be the FDIC, or the Federal Deposit Insurance Corporation special assessment fee. So what this is that due to the US banking collapse earlier in 2023, sorry. So what they did was the regulator will apply this special assessment fee of 0.125% to uninsured deposits in excess of 5 billion. So in short, this means that if you have more than 5 billion of uninsured deposits, they will charge this 0.125%. And so this will be charged in, I think, 8 quarters, and this is sort of to recoup the loss of their deposit insurance fund, which they used to replenish for the SVB collapse. I think it was almost 16 billion. Hence, they're trying to take it back from the big banks. So what is known is mainly the big banks that will be paying this fee. Yeah, and it's for the next, I think, 8 quarters. So this is the first quarter. So I'm not sure what the banks are doing. They haven't really said much, but if they will probably be wanting to lower the amount of the uninsured deposits so that they can pay less of a fee. But I mean, it's only for 8 quarters, so it's really hard to say. Hopefully they will give an update soon. Yeah. So that's all I have for the US banks. I'll hand it over to Mel for the REIT Monthly. Thank you.
Yeah, thank you, Glenn. I'll go through REIT Monthly. Next slide, please. As REIT index continued to rally 8.9% in December after gaining 6.7% in November on expectation of the interest rate cut in 2024. Due to the recent share price performance, the dividend yield spread has fallen to 3.1%, and it is 1.3 times standard deviation below the mean of 4%. However, with interest rate expected to fall, dividend yield spread could widen as SJ 10-year yield falls. Next slide, please. The FOMC hold federal fund rate unchanged at 5.25 to 5.5% for the third straight meeting on 13th December 2023. And it's not signaling that it is expected to make 325 basis point rate cut in 2024. With lower interest rate, as rate will experience, firstly, lower financing cost, secondly, higher dividend yield spread over the bond, and thirdly, higher property valuation as cap rate compress. Furthermore, with interest rate peaking, we expect deal making to return in full swing. Therefore, we expect a sector recovery in 2024 to 2025. As rate is now trading at forward dividend yield of 5.8%. 0.4 standard deviation below the mean of 6.1%, and price to NAV of 0.93 times, 1.1 standard deviation below the mean of 1.03 times. Despite the recent rally, we think it's a good time for investors to reposition into S-rate for the eventual interest rate pause and decline. Although it will remain a challenge for S-rate, apart from the hospitality subsector, to grow DPO in 2024, with interest rate peaking and possibly decline, we expect low single-digit DPO growth in FY24. Next slide, please. With overweight hospitality subsector, RevPAR is likely to continue its upward trend, but at a slower pace compared to 2023 from a higher base. Also, the increased MICE and entertainment events in Singapore will further boost the sector. We believe the hospitality subsector has the most potential for DPO growth, as its increase in revenue can be more than offset any increase in interest expense and operating cost. Next slide, please. We also overweight retail subsector. We anticipate tenant sales to rise further due to increasing numbers of international visitors' arrivals and population growth. The occupancy cost of 15% for suburban malls and 25% for downtown malls is lower than historical average, leaving the potential for more positive rental reversions. There's also very little supply entering into the market. Return to office and pick up in major events to be held in Singapore in 2024 should continue to lift tenant sales and give confidence for retailers. Positive rental reversions ranging from high single digit to low teens is anticipated for the downtown malls, supported by the 30 days visa-free entry to Singapore for Chinese citizens. Demand remain robust for catchment areas around suburban malls, and we foresee a healthy mid-single-digit rental reversion continuing in FY24. And next slide, please. Yeah, here's a consolidated table for our coverage. Yeah, that's all for me. I'll hand over back to Zing for technical parts. Thank you.
Thanks, Miao Miao. I'll move on to the technicals. So first up will be on S&P 500. Last week, the index broke out of this range consolidation which took place since middle of December, and then it actually created a new all-time high, breaking above this 4,818 previous high set in January 2022. So for the outlook for S&P 500 this week, we are likely to see more upside towards the 4,900 level with the break of this consolidation. And also, when you look at the Bollinger Bands, they're also currently expanding. So we are likely to see some volatility expansion towards the upside. For S&P 500, the immediate resistance could lie between 4,890 to about 5,000, with 5,000 being the main uptrend channel resistance. And the immediate support is likely to be between 4,790 to about 4,840 area. For individual counters, we have a technical sell on Genting Singapore at 98.5 cents, take profit levels at 92.5 cents as well as 90 cents, with a stop loss at $1.02. The stock last closed at 98.5 cents on Friday. So for Genting Sing, it has been creating a series of lower highs over here along a downtrend resistance line. And then adding to the bearish momentum is that we see decreasing momentum on both the MACD and RSI momentum indicators. And also another bearish signal will be the breakdown of this uptrend support line over here recently. So with that, the stock could pull back towards these two support levels at 92.5 cents as well as 90 cents, which is confirmed with the 50% as well as 61.8% Fibonacci retracement levels. When we take the swing low at 81.5 cents and the swing high at $1.03 over here. Now, so for the just summary of the trades initiated last week is a sell on Genting Sing, and it's currently in progress with the stock price currently flat from the entry price. Yeah, so that's all for me now. I'll pass on the time to Paul to talk about Singapore Weekly. Thank you.
Yeah, thanks, Zin. Next slide. Yeah, we just run through some of the key macro data that was released last week. So for Singapore, we had some of the exports numbers. It continues to be surprisingly soft. I think it's down -1.5. Electronics was a big drag, down 12%. This is sluggish despite we do see rebound in export sales for Taiwan and in Korea. Perhaps because Taiwan and Korea probably have a stronger semiconductor component to it. For private residential or new launch, it was a weak month, down 21%. For the second half, there was 3,145 units sold. So it should help some of the real estate agents because they usually report their results every 6 months. So the second half numbers should be better. But for the full year, the number of units sold, new launches sold was about 6,006 and is down 10% year on year. This is a this was despite new launches jumping up by 50%, not 50% jump in new launches to almost 7,600. So in 2022, new launches was 4,000 plus, and in 2023, new launch was 7,000. But even then, units sold was still down 10%. I think this is reflective. I think we saw the newspaper, the headlines that the two recent launches, the units sold was only around 40, 50 units. So sentiment is still very weak it's beginning to continue to be weak for new launches. In China, there was a slew of data that comes out. Actually, retail sales is actually still strong despite all the headlines. It's a bit hard to get a trend line because it's volatile. As you know, last year there was still in lockdown mode, so there's base effect. So you probably get a better trend in the second quarter when you exclude all these lockdowns base effects. But one news was that the auto sales in China hit a record month. December was up 23% and it hit a record of 3.1 million units sold, the highest ever for any particular month. The Achilles heel for China remains the fixed assets is up 3%. It's a record low. I mean, if you exclude pandemic, in China, fixed assets has been fixed asset investments has been a big contributor to GDP. But right now, what's happening is that the private sector is not investing. It actually declined. It's a record. These are record numbers excluding pandemic. They're down about 5%. So the private sector still has no, I guess, a lack of better word, loss of confidence in investing. And this reflected, partly contributed by the weak property market. So residential sales, you measure by square meter, is still contracting sharply in China. So doesn't seem to be any bottoming out in property sales in China. It's down 26%. It's almost going to hit like 3 years, more than 2 years of continuous decline in property sales. The one positive was that the retail sales in China, excluding in the US, sorry, is actually better than expected. So actually, the consumer spending in the US perked up in Singapore. Perked up in December, and despite expectations, and the one that actually went up the most was actually electronics and appliances, which also suggests that there's coming back into buying goods rather than just services. Next slide. So in terms of technical views, the headline last week, the one that took the most press was that there's a boom in AI hardware. I think okay, we probably got some connection issues. Yeah, sorry for that. Okay, yep. Yeah, I saw the comment, the ISO country code for China. Yeah, okay, no problem. I can put CN. It's no issue. Yeah, thanks. Yeah, sorry for the technical issues. Yeah, okay. Anyway, so let me just rephrase. I think AI stocks rallied last week, and this is mainly because of there were two news bites. I think firstly, TSMC guided for low to mid 20% revenue growth in 2024. And they attributed it to high performance computing, or HPC, which is basically AI. And this was also followed by another company in the US, Supermicro. They focus on AI servers. They sell that, and they even more aggressive. They raised their December quarter, which not just another few more months, they will announce the results by 30% to 3.6 billion in revenue. So that triggered a rally in all the AI stocks, and Nvidia, of course, hit a record high. So in terms of the impact to Singapore semiconductor equipment, we think it's muted. I think why we say that is that TSMC CapEx for 2024, their guidance was largely unchanged. So if you notice that last year was 30 billion, they spent this year 28, 32. So why this is important is that TSMC or foundries are the ultimate customers for your UMS and all, because like Applied Materials, which is UMS customer, will supply to companies like TSMC, and their capex is not moving much. So unless what could trigger the UNB rating is that unless the memory makers raise their capex. So that is something to monitor, and of course there's also ASML's results coming up. But for me right now, I don't see any big change that you're going to see a big bounce in some of these semiconductor names in Singapore, at least my own view. But one thing good is that with this AI cloud, with this AI, I won't say hype, but this AI driver, it will still keep semiconductor valuations elevated. So this is obviously still a positive news for Singapore semiconductor names. And then moving to another macro news, like we mentioned, so the healthy US and China consumer spending. So our view is that consumer spending is still resilient in the US, highest growth in 10 months, and also the China is also resilient. So one way to give to message out this particular macro number is that we think this could only push back any rate cut expectations. That consumer spending globally is actually holding up and more resilient than expected. So the economy is really, in December, the economy is just trending very well, I think, because with the consumer spending so strong in US and China. Some of the events to watch, we highlight in green, there's going to be Netflix and Tesla results. And of course, the US core PCE, which is the Fed's favorite inflation gauge. In terms of the corporate insights webinar that we have, we call them corporate insights now. So for this week, we will have Sheffield Green and also Oh My Home. And then in February, you have the Capital DC, Money Hero, which is listed in the US, and then Emperador and Resource. So feel free to register if you have the time. Next slide. Okay, this is just illustration of the property sales in Singapore. So what we do see is the momentum is slowing down. So you look at the table on the left. So this is the yearly new launch sales, excluding EC. We exclude EC because EC is quite volatile and lumpy. It may not point to the underlying trend. So you notice that it's another weak decline in 2023 in terms of new units sold. This is despite no launches, like you mentioned, jumped almost 52% to 7,600 units. I think a better illustration would be the picture on the right. So this is the rolling 12 months. So it means the last 12 months of units sold. And you can see the momentum is sliding down quite sharp. So that's why we think property agents' earnings will be resilient because there's still a lot of launch, but just that we don't see any much strong growth or any huge earnings upside. Just that the take-up for new launch is still very weak. Next slide. So this is just a reflection of US consumer demand, which I guess is the most important number because the whole global economies right now is all dependent on the US consumer, largely at least. So you can see that there is on the left, you can see there is a pickup in US retail sales. I thought it would be moving sideways, but actually it's starting to accelerate a bit. And surprisingly, is partly driven by goods. So if you look at the red line, is electronics and appliances, and this is obviously a huge discretionary item that they are spending on. So although the US consumer is stretched, but they are still spending quite robustly. Next slide. Then this is just for China. So China consumer is, I don't have a chart here, but consumer is actually quite resilient. But the Achilles heel is really investments. So you look at the blue line, which is the investments, it was a major GDP growth driver for China. You can see on the left, it used to be 30%, a really huge number, 30, 20%. So right now, if you exclude the pandemic, you're trending at 3%. It is the beige line that's causing all the problems. The private sector is not investing. The one on the right is there's really no bounce here. The property sales are still dropping at 20% clip. So you can, like we mentioned previously, we think the red line, which is the annualized number of units sold in China, probably can, based on our own back of envelope calculations of marriages, household formation, we think it could probably only trend at 7 million home sales per year. Right now, it's still about 8 million homes sold per year. I mean, roughly. So we still no signs of a bottoming in China property sales. Next slide. I think that should be the end. Okay, with that, we can take on the questions. Zain, can you just do a quick one? This one on the chat is the live TA webinar for tonight cancelled?
Just to address that question, yes, today there will be no US live TA. There's another session conducted regarding options tonight. Yeah, so you can tune in to that. Thank you.
Can you register that in the Poems website or the
Yeah.
other one?
I mean,
Yeah, okay.
to find the link.
Okay, never mind. In the meantime, can the rest just try to address all the questions? Thanks.
Yeah, thanks, Paul. Okay, I'll take this one about the outlook for the banks, the three banks. So I'll just do it as an average, right? So okay, so for the banks, the question is what's the outlook for DBS, OCBC, and UOB, please? Yeah, I'll answer this question. So for the Singapore banks, sorry, we look at the three main, I would say, segments for the banks. You look at firstly the net interest income. So net interest income, they are looking at it to be quite flat for 2024 because mainly due to the rate cuts. However, they are also thinking that although the rate cuts will sort of negatively affect their net interest margins because they are earning a smaller spread, but the loans growth will sort of buffer that and offset that decrease. So it will be a sort of a net. It will not really change much because loans growth will pull back up. Loans growth will pull back up mainly due to the lower rates and there are more, as in there are more interest in loans going into 2024. So for the second point would be their fee income. So the banks have said that their fee income will probably be the boost that will boost their earnings in 2024. And this is mainly due to sort of a pickup in their wealth management, as well as, credit card fees are coming from, as well as credit card fees, which will be coming from all these concerts and sort of a recovery in COVID and travel. So I'll just elaborate further on the wealth management portion. Wealth management, how do they see this going? Because I also did a sort of a brief summary, a sort of a brief calculations on the AUM, and actually the banks have been showing quite healthy growth for the last couple of halves, sorry. So they only release it every half year. So the last two halves, I think, they have shown quite healthy assets under management growth. So however, but if you look at the last half, you see that their fee income actually dipped despite their AUM growing significantly. And this is mainly due to the market being more competitive, firstly, and also it's not as good. So they have to charge a lower fee per per dollar that they have. So hence that's why the fee income actually dipped despite the AUM or the base growing. However, going to 2024, a possibility is that with the capital activities improving and market activity improving, right, they could be able to charge a higher fee and hence be able to expand further on their fee income. And okay, so I touched upon the loans as well. So for the provisions and their credit costs, they said that they will be quite flat, so they don't really see much change in the provisions going in 2024. So you could expect that this year will be quite similar to last year as well. And I think net, if you look at the full earnings, we would probably see the banks, the growth will not be as large as in 2023, but I think they will be able to maintain their earnings, and the growth should come in slightly lower than in 2023, but I think it will still remain very high for the banks. Maybe I can also, maybe for dividends also, yeah, I think that's the one that the question quite a lot of people will also be quite interested in. For dividends wise, I think we have to see where they're heading for the fourth quarter of 2023. They haven't really they haven't announced their results yet. So from there, we can sort of gauge how would they be positioning themselves in terms of the dividends for at least for this year. So once they announce that, then we will know. But I think we could sort of expect that dividends should increase, or at least increase by a bit for the banks in the fourth quarter of 2023. And then they will give us more information on how they look at dividends going into this year at least. Yeah, hope that answers the question for the outlook. That's all for me. I'll hand it over to the rest of my colleagues. Thanks.
Oh, Helena, I'm pretty sure I did the Apple thing.
Okay, so I'll take the question about the Apple. You're right. The sales are quite muted right now. So even for their strongest product, iPhone, in Q4, they have seen record sale in China, very, very strong performance. But just in the first week of 2024, iPhone sales in China fell as sharp as 30%, despite Apple trying to do a lot of cutting price on the online platform. Compared to other brands like Huawei didn't really see much fluctuation, but iPhone dropped sharply. Despite other areas, they compensate for the loss of sales, but overall the sales are quite muted. But I guess the optimism of Apple came in two sectors. The first is the strong growth in their service sector. So in their service sector, they've been doing really, really well, especially in emergency market. So I think last quarter, their revenue was up for 16% year on year, which is the all-time record. And that is across all category and geographic segment. They have a very strong install base, and their customer engagement transaction and paid accounts both are increasing at double digit. So this is quite optimistic. So right now, service sector consists of 20% of the total revenue. So we do believe there will be a strong growth in the service sector. Another section would be coming in from the Vision Pro side. So definitely it's sign that Apple is slowly embracing AI. They're definitely accelerating its generative AI effort and their large language model enabled operation systems. You can also see on the job website, recently Apple has a strong increase in the job posts in their deep learning and natural language processing roles. Their competitor like Samsung recently came out with the newest version of phone, have a lot of AI features, like you can do live translation. You can also like convert audio to transcript directly. There's also Galaxy AI editing where you can they can suggest what is the suitable tweak to each of your photo. So definitely people have the same anticipation for Apple to come out with similar AI features. And I mean, Apple has already been using some AI features, though not a lot, like facial recognition, for example. There's also a media article that suggests AI's GPA chatbot would be more powerful than the OpenAI GPA 3.5 model. So this and also if Apple is embracing AI technology a lot, that will also means there will be an increased demand in the new device, because older device, the iPhone, the phone itself does not have enough processing power. So then more people would be going forward to buy the newer version of the iPhone. So that's definitely something that's optimistic. But with that being said, I mean, pretty much all companies right now, they're joining the AI race. So it is still very hard to say, I mean, who is going to be the leader in this area. Same is the performance of the Vision Pro. I mean, yes, they're saying it's going to be a very revolutionary product. It can be a revolutionary to the point that everybody start using it, but like I said before, the price is still pretty high. So it might also become that because the high price, not a lot of people is actually purchasing it. So it's it's still very hard to say at this period. But I would say different people definitely have very different opinions. Some people feel very strongly that the Vision Pro will definitely be revolutionary and really boost the company price. So yeah, I hope that answers your question.
Thank you, Helena. I'll take the rate question. With the possibility of rate cut this year, what is the outlook for ST rate? Is it time to accumulate? How about prime and Manulife? Oh, we think it's a very good time to reposition rates. Firstly, because of the lower financing cost. Secondly, higher dividend yield spread over the bond. And thirdly, higher property valuation as cap rate compressed, like we mentioned just now. And with interest rate peaking, we expect deal making to return in full swing. And we also, therefore, we expect a sector recovery in 2024 to 2025, and with single-digit DPO growth for S rate. And for prime US rate, the top performer for the month was actually prime US rate, again, 95.1% in December. The leverage ratio, as they previously reported, was 49.8%. Therefore, there's a buffer of 12.9% value decline before they hit like 50% threshold for the gearing. And we do see some like downward pressure on the rate, on their asset valuation. Yeah, because like but it won't likely to be as severe as Manulife. Yeah, since like 6 of prime US REITs asset, the physical occupancy is between 67% to 85%. And we also observe like there's less remote job available on the market, and therefore like would improve the physical occupancy. It showed like 8% improve year on year. So like revenue is also more resilient for prime US rate compared to Manulife. Yeah, but we do see like pressure on terminal cap rate expansion, so it's likely to drag valuation. Yeah, for Manulife US rate, their valuation down 26.7% in FY23. So they recently reported that the valuation down from 1.6 billion as of June last year to 1.4 billion as of December last year. So gearing is now at 58%. And the most updated news on Must is they announced a recapitalization plan, which includes paying down 285 million of borrowings to each lender and raise 328 million through dispositions, conditions of sales, including independent valuation period to sales, and the price won't be less than 90% of the valuation. And in return, lender will offer a waiver to the past and existing bridge, including the financial covenants, cross defaulting, etc. And they'll also offer a temporal relaxation on the financial covenant till December 2025. In terms of financial impact, Must is estimated to follow the sales following the sales of Park Place, sponsor lender loan and divestment of 4 properties. After that, the leverage ratio will decline to 49.4%, and NAV per units will be down to $0.34 US. Yeah, and on a pro forma basis, assuming like the transaction take place on 1st January 2023, like DPU would say a 50.2% decline. Yeah, so like both of the REITs will updating their full year financial performance next month. Yeah, so we'll update investors on our webinar. Yeah, that's all for me. I'll hand over back to my colleagues. Thank you.
Peggy, you want to do the C trim? Yeah.
Okay. Okay, let me address the question. Outlook for C trim, please. Okay, C trim after the merger with POM last year, they underwent a restructuring. The results of the restructuring is supposed to be announced by end of last year. We haven't heard anything so far. So well, if it's good news, it's usually earlier, will be reported earlier. So we think 2023 will be another year of loss. That they're probably going to report after 6, 1, 2, 3, 4, 5. Yeah, after 6 years of loss, after 5 years of losses, this make it the 6th year. Okay, and there will be probably a lot of kitchen sinking write-off. They had in their books 4.8 billion of intangibles after the acquisition of KOM, and which might need to be revalue. They will test for the goodwill and they might write down. But we don't think it could go into sorry, let me try and okay, at the end of first half, they had 2.4 billion of short-term loans that they need to refinance. Over the last few months, we've seen them gradually raising money to address this 2.4 billion. So haven't really been able to ascertain whether all this has been addressed. But it looks like they might not get into a situation where the auditors need to qualify their accounts. So, but still, all in the book value at 12 cents, we don't see any improvement in the earnings. Given that they only recently had a contract that was cancelled by Empire Wind due to the difficulties at the offshore wind operators. So that's one. The order books is not not being replenished since third quarter last year. Second thing is that the Brazil investigation is still ongoing. Even though Martin Chia has been the portion has been taken off, but still the investigation on the company is still an issue to be addressed, and 2/3 of the order books is still mainly is still from Petrobras, which is Brazil. So we are cautious on this. C3 meeting, the announcement on the results it's not going to be positive for the stock price. Thank you. Maybe I talk about the yen lot. Will yen lot be very negatively impacted by current property buzz in China? At below 50 cents, what's your view? Yen lot just recently decided that they don't want their credit rating on their bonds. So that basically the situation for the property market in China right now is really the one who call the shots are the the rating agencies and the banks. So it really depends on how these two parties will move. The government has been the announcements can see is very proactively asking the provincial government to try to convert the use of those properties, the landmei, those that they cannot be fully developed due to cash flow reasons, to maybe convert them into social housing or low cost housing. So the government, the local government, provincial government might buy back those land or the assets, and then they redevelop them to become low cost housing. So of course, definitely when they buy it, it's going to be at a lower price. Then so developers will probably have to take the loss for disposing of these assets. So the current environment is while the government is trying to do some damage repair here, still we think the property sector is really in the hands of the banks and the credit agencies, and of course how the governments will determine how to restructure the sector. So with all these uncertainties, we think it's probably too early to get into the sector at the moment. Yeah. Thank you. I pass on to the rest of my team. Thank you.
Yep. Okay. Yeah. Thanks. So just to add on to what Peggy said, I think you're not sure how the banks will react, because if you recall, when for like Lipo Mall Trust, when their ratings went to CCC, it caused a lot of trickle effect. A lot of the banks had to withdraw financing because it was downgraded to CCC. So I'm not sure how this will affect Yanlot. I think if they remove their the rating, I'm not sure if there's any of the loan covenants requires some ratings in it. So that I'm not too sure. So that's but I remember when Lipo Malls had a major downgrade, it affected all the loan covenants too. The banks can't lend when they had CCC. But anyway, this could be a separate situation. Okay, let me just try to clear off, then we move on to what's the outlook for Wilmar. Price keeps trending down. So if you look at the palm oil price right now, it's really moving just sideways, so maybe around 4,000 ringgit per ton. I think that's probably going to be the same for Wilmar in general, and Wilmar's results will be burdened by. I think this is a similar situation for macro wise for sorry, for what was the other company? Sorry, give me a minute. For the other sorry, give me 1 minute, just slip my mind. For yeah, yeah, this going to be the same situation for all the commodity players because the high interest rates is going to be a negative for them. Just slip my mind who's the other commodity commodity company. So that's why we don't see any particular upside for them. The one possibility is that soybean prices have really come off quite significantly. So that might be a positive for them because if they can get the cheaper soybean crush mills, because another part of the business is soybean crush. So I mean, in general, we just think that it's going to be a very range bound situation for them. I'm just trying to find the name of that stock. Sorry for that. Yeah.
Oh, Olam.
Oh yeah, Olam. Yeah, sorry, just slipped my mind. Okay, so you also get questions on Olam. So the macro conditions for both is not very favorable. The headwinds for I guess Olam and Wilmar is number one, the interest rate, because both are very highly not highly leveraged, but both are leveraged. And the second thing is also the currency factor because both are reliant on emerging market demand. And with inflation so high, we do see a cutback in consumption. Yeah. So sorry, I just slipped my mind. Olam. Yeah. Apologies for that. Yeah. Oh, okay. And the next one, what's your view on Food Empire going forward? To my surprise, I think Food Empire sales in Russia actually doing really well. They've got a lot of pricing power because inflation shot up so much. They actually managed to raise prices. One of the worries we had whenever we were actually looking and considering also writing coverage, but the issue we always had was that it was the Russian ruble. So although they've managed to navigate a lot of the weakness in Russian ruble, because for those who do not know, their largest markets are Russia, and I guess Ukraine too. I guess less now, but the two main markets is Russia and Ukraine, and now also Southeast Asia. So for us, it was always the Russian ruble. If the Russian ruble really collapsed, so we always worry how they're going to navigate those situations. So we just that is an answer we do not know how to answer if clients were to recommend this to clients. I mean, if clients ask us, no, what if Russian ruble collapse? No, so then of course it's going to negatively impact them. But right now they've managed to perform well because they managed to raise the prices quite significantly, despite the weakness in the Russian ruble. So that's one of the rightly or wrongly. That's why we didn't really cover them. Okay, Kepa, I'll leave it to Peggy. Okay, you want to take on the REITs one? Okay, let me just answer this one. The optimism on REIT now is hinging on rate cuts this year, but if the war in Middle East spreads to a larger scale and causes oil price to spike and thus inflation, will the rate cut be held back instead? Oh yeah, okay. So we think near term, okay. So in the near term, I think we'll rather hold back a bit on REITs because we think it moved up quite a lot. I think like what Meow shared, November, December, you probably saw like a double-digit, low teens jump in the REIT sector. That's number one. And number two, we want to get all the results out, especially those REITs with foreign, like something like Prime. We want to get all these results because the valuations are definitely going to come down. So we always worry if the valuations were to come off more than expected, then you're going to trigger this very negative spiral, something like what happened to Manulife. So that's why we are a bit more cautious in the very near term. In terms of the news on Middle East, I think for me, my own thoughts are I think there's a lot of downside to oil price, my own view. Because even with all these conflicts, the oil price hasn't really budged much. And if I don't have, maybe next week I'll just show you the charts on some of the US production. So US oil production has hit record levels. Not only that, probably 300,000 higher. Then you also have Iranian oil jumping out, Venezuelan oil also spiking. So my own thoughts is that this is even with OPEC doing such aggressive cuts. So my own thoughts is that when nobody asked me, but my own view is I think there's a lot more downside on oil price. But you are right. I mean, if oil price really spikes up, then it will make the Fed become more hesitant to raise rates. But right now, like we highlighted, I think it's more likely the economy is still very strong as we enter 2024, just judging on some of this consumer spending. So I think any rate cut will definitely going to be delayed. I think our own expectations is obviously in the second half of 24. Yeah. I know it's a long answer. Yeah. Can you share on outlook for Olam and Del Monte? Yeah. It's not only okay. The issue for on Olam, Del Monte, Thai Bev, most of them is really emerging market demand has been really weak. I think sorry to keep mentioning this, but you see it in Thai Bev's, the Vietnam exposure. I mean, yeah, Sabeco and everyone. So the high inflation has really cut back a lot of consumption spending. So across the board, everyone's earnings is very weak. Like Del Monte's earnings, the Philippines has been the one that has been exceptionally weak. And you get two negative parts to it. When the demand is weak, the volume comes down. Then the volume comes up because we know it's bad. Then the second part of it is that they cannot raise price because the demand is so weak. And then at the same time, the material costs keep rising. So you get a volumes, you get a revenue squeeze and you get a margin squeeze. So I don't have any idea when this is going to rebound, but so far that is what's hurting all these consumer names and also trading companies, I guess, like Olam and so forth. And someone like Olam is, of course, further burdened by high interest rates. So if I were to guess any recovery, because the Olam stock is all about doing a listing, you are talking about really, you have got to have rate cards. Then maybe there's a chance. You have to have a rate card, a weak US dollar, then emerging market spending to recover. So you need to have this trifecta of things before maybe Olam can see a rebound and maybe they can make their IPO plans live again. Yeah, I hope that answers it. I mean, yeah. I'm just giving a very top-down answer, so I don't have a bottom-up answer. Yeah. Peggy, you want to take the capital, then we can move on to the.
Okay. The question is assessment on Keppel, please. And maybe a good reminder is that Keppel actually owns 5 listed REITs on the Singapore market. DC, Keppel REIT, Keppel DC, Keppel REIT, KBS, even Prime. Is one. I forgot which one. I know there are 5. Yeah. So when these prices move in the market, and they move and react in reaction to the interest rates movements or the yield movement in the yields. So Keppel price also react in that way. So that will also affect the SOTP, the sum of the parts for Keppel. But on the fundamental wise, Keppel is on the right track to become a capital land investment in terms of building up his fund management portfolio platform and divesting his assets and under his holdings, either outright or putting them into this fund management platform where they continue to earn recurring fee income and also operating income from all these assets. So we think this we call it asset monetization will happen probably nearer to the first half of this year. And if the interest rate stabilize at a certain level, the asset acquisition and divestment activities will pick up and make it even easier for Keppel to carry out its asset monetization. So overall, we have a high call for Keppel for this initiative and movement in the right direction. The one positive that they did was by this year they will complete the acquisition of 50% of FAANGM Capital. That actually will extend their reach to the sovereign wealth funds, to the pension funds in the European markets, further enlarging their capability to raise funds and to build a bigger fund management platform. So overall is a positive for Keppel, but in the short term, all these movement in the share price of REITs will affect the valuation, that will affect the share price of Keppel as well. Thank you. I hope I've answered that. Thank you. Maybe I move on to Zane for the
Your
technical.
target price, Peggy, what's your target price you're asking?
Oh, my target price for Keppel is $7.52. Thank you.
Yeah, okay. Just one quick one. So any recession in sight, we actually don't see any recession right now. Most of the data, of course the leading indicators show, but right now, like even the inversion of the yield curve, not sure right now whether is it pointing to recession or just pointing that inflation is coming down. Yeah, but right now we don't see anything. There isn't any. Growth is very sluggish, but it doesn't show anything of a recession right now. Most of the numbers are still, they are declining, but they're not like collapsing and so forth. What we worry is that this slow growth will get into this vicious cycle of like you highlighted before, the definition of recession, where you get this sales coming down, then they start to cut hiring, cut costs, then that in turn also cause another spiral in sales coming down. So far, we don't see this negative spiral. That's what we mean by recession. Yeah, that I think is more critical. Later part of the year maybe, but right now there isn't any that we see. So what we worry of, the worst situation is sales come down, then corporates got to cut hiring, cut staff, then that will again hit incomes, and again then they will hit sales, then you get this negative spiral. That's the worst case scenario, but so far we haven't seen that part yet. Yeah, I hope that helps. Yeah, thanks. Hand it back to you, Zain. Yeah.
Thanks. I'll start with the TA. So first up, I think is Costco shipping. Currently, the share price has pulled back. I think currently, it's reaching a support level around the 15 cents to about 15.3 cents level. 15.3 cents being the 20-day moving average. Yeah. So I think over here there might be some support and a bounce, but likely to have some resistance of a lower high of about 15.8 cents to about 16.2, 16.3 cents about that. Price is also currently consolidating in this descending wedge pattern over here. Okay, then next one I'll move on to Wilmar. Okay, so for Wilmar, I think currently it's doing it's retesting this downtrend channel support over here. Let me just highlight it in blue. Yep, so over here I think there might be some, I think in terms of downside wise, I think it's limited given they're quite at low levels of this support. But upside wise, there's likely to be resistance around the 340s, where it was quite a good support previously over here and price broke down recently. So in the near term, I think Wilmar could do a bit of a range bound trading between like 330 to about 340 in the week ahead. Okay, then I'll move on to the three local banks. Okay, first up is DBS. I think for DBS currently, I think in terms of the downside wise, I think it's limited. Share price has pulled back from this 3340 resistance all the way back until this 3190 previous resistance level over here, where the price broke out in late December. So we are currently seeing a retest over here. I'm expecting some sideways trading first and possibly a breakout of this downtrend resistance line over here in the near term. Yeah, but I think in terms of resistance wise, 3250, there's likely to be some resistance. So maybe a 50 cents move currently for DBS. Okay, then next up, OCBC. Okay, OCBC, I think recently share price did like a double bottom. So on Thursday, price retested like the support around 1270 and there was a rebound. So I think it's more of a trading a bit of a range consolidation currently between 1270 to about $13. So I think that will probably continue. I see resistance about $13 to about 13.10 for OCBC. Okay, then next up is UOB. So UOB, I think also a bit of a range trading going on. Retesting this support zone of about 27.60 to about $28, which was prior resistance from October to December last year. So I think in terms of the downside wise, I think it's kind of limited. Price could just do a little bit of a sideways currently around the $28 level for UOB. Okay, next up I'll move on to BRC Asia. Okay, for BRC Asia, I think currently it's still in a very nice uptrend over here. Price is still supported along this uptrend support line, and then recently there was a breakout of this 180 resistance. So currently it's at 184. So I think for now, nothing too much. I think likely the uptrend is still likely to continue for now for BRC Asia, given that it's at record high share price now. And next up is CapitaLand Escort Trust. CapitaLand Escort Trust, I think currently there's some downside momentum, given that price has broken down on this rising wedge formation. Also currently seeing resistance along this downtrend resistance line over here. And then we also form a lower low breaking down this 96-cent support level. So I think in terms of the price wise, we are likely to see price retest the previous resistance around the 92 to 93 cents over here as some support. Then I'm expecting some range bound trading afterwards. Then next up, 1288 Hong Kong, which is Agricultural Bank of China. Okay, for Agricultural Bank of China, I think there could be some a bit more downside. Given that share price I think recently did a double top around the $3 mark over here, and then we saw a pullback. The near-term support wise is around the 275 to about 280 zone over here. Currently it's about 283. We could see a little bit more downside. If it does go down to test this support area again, then I will expect a bit of a range bound trading going ahead with some resistance first around around 293 to 95 level. Okay, next one is G Invacom. Yeah, I think for this counter, recently after hitting a resistance at the 0.062 level, price has pulled back. And I think it's currently at a 10-day moving average currently, and also this coincides with a previous, at the current price level, also coincides with a previous resistance formed in September, October last year. So I think there could be some support coming in for now. Maybe do a bit of a range bound trading in the near term, since there's also likely to be resistance above 0.060. Yeah, so I'm expecting some range bound consolidation first for this counter. Okay, I think I'll share the TA for Citrum as well. Okay, for Citrum, I think the chart for now doesn't look that great. So reason being is that initially it was holding up along these moving averages over here, the 5, 10, and 20-day moving average. But on Friday there was a breakdown below all three moving averages, below the 0.113 price level. And then in terms of the MACD wise, it's also increasing bearish momentum. So there could be some, I think there could be some downside coming for Citrum, given that the low of 11 cents looks like it can't hold. And we might see some retest of the lows at around 10.5 cents for Citrum. Okay, next one is outlook for Thai beverage. Okay, for Thai beverage, I think it's still facing some resistance. So okay, so this blue color line is the key resistance to watch out for, this downtrend resistance line. recently priced it went up to around 54 cents to retest this resistance against, coupled with this horizontal resistance from October to November last year. And then price we saw a pullback. I think for now there could be some range consolidation with the support currently around the 51 cents to about 52 cents zone over here. So I'm expecting some sideways trading for Thai bev first. Yeah, I think for a good reversal to happen for this counter, we need to see a lower high actually being formed and actually form a higher high afterwards. So we must see a higher low form over here, and then subsequently price must take out these highs to try to break out this downtrend over here for some rebound in the share price. But currently we are not seeing that yet. Okay, TA for Tesla, AMD, as well as Applied Materials. Okay, first up is Tesla. I think really Tesla has pulled back quite a lot since breaking down this rising wedge pattern over here, as well as this horizontal support at $228. And I think currently, in terms of the downside wise, I think it's limited since there's a support zone between 206 about 212 over here, this swing low support form in November last year, as well as we have a swing low support form in August, as well as previous range resistance February. So this zone is actually a quite important area for Tesla. I think there could be some rebound if a price managed to break out this short-term downtrend resistance line this week. But I think in terms of upside wise, it's likely to be kept around the low 220s over here. Yeah, I think more importantly will be the upcoming results this midweek that will affect the share price more for Tesla, I think. Okay, next up, AMD. Okay, AMD, I think it's definitely very bullish. It set a new all-time high, taking out the previous high around 165, and it's trading outside this uptrend channel currently. So currently it looks like we are seeing a bit of a blue off top kind of bullish pattern. So I think there might be still some upside coming, and yeah, some upside coming for AMD until it decides to do a bit of a consolidation. Okay, then next up is Applied Materials. Okay, for Applied Materials, I think it's in a gradual uptrend over here. You can see price forming higher highs and higher lows along the way. Currently, I think I would expect price to actually retest about resistance at 170, 171 over here along this trend line resistance before it starts to consolidate a bit for Applied Materials. So I think there could still be a little bit more upside to come for Applied Materials. Okay, then next up, going back to some local counters, DFI. Okay, for DFI, I think for now it's still quite bearish, I think. Given that it's been trading in the range between about 210 to about 240s, and currently looks like there's a breakdown below the lows over here. So there could be still some further downside, given that price preceding this range consolidation was really a downtrend. So this is just a bearish consolidation that we could see some trend continuation happening for DFI. Yeah, so if the bearish momentum continues, we could possibly see a retest of the lows created in October 2022, where price dropped below $2 to reach the 190s level for DFI. So I'm still a little bit more bearish on this counter currently. Okay, next one is Hong Kong Land. Hong Kong Land, currently I'm also bearish. Okay, so At first it was looking okay. There was a breakout above this 340 range resistance level, as well as it was trading in this ascending wedge over here. But once this bearish candle came, there was a breakdown below, and price has just started to trade a lot lower to retest the lows, the lows near 310 region. So I think currently we're quite near the swing low form in October last year. There could be some short-term support coming for a short rebound towards around 315 perhaps. But overall, the trend wise, I think is still quite bearish for Hong Kong land. Yeah. Okay, next up is 10 Cent Holdings, ticker number 700. Okay, for this, I think it looks like the counter retested the lows of about 263 today, where this was the day there was the news about the gaming sector releasing in December. So I think currently there could be some support coming in at these levels over here for a short-term rebound. But there's likely to be resistance around 275 over here, where we see a downtrend resistance line as well as this horizontal level breakdown recently. So I will expect a little bit of a sideways trading for this week. The next one is 981 SMIC. Okay, so for this counter, I think looking back, it's entering a quite a strong support area. So it's between around 1490 to about 1580 over here. It's held as support since 2022 multiple times over here. So I think that over here the downside is quite limited, I would say. I think if there's some reversal signals coming, then there could be some short-term rebound in terms of the share price after the selling abates. Yeah. Then I think in terms of near-term resistance wise, it's likely to be between around the 16.40 to about $17 level for SMIC. Okay, then next one is Hang Seng Index. Okay, for Hang Seng, I think I'm looking at the Hang Seng Index futures. So currently, I would think that there's likely to be some limited downside for Hang Seng in the near term. So we have actually the index the futures actually hit this downtrend channel support today over here around the 15,000 mark, and it's also coincide with a psychological level. And another thing is that when I noticed the previous sell downs in the past, the RSI, the 27, 28 level seems to be a good support, which price has actually crossed below today. Currently is around 26. So back in we see in the first instance back in June last year, when it hit the support, coupled with the RSI hitting the support, we had quite a strong rebound in the coming days. And then the second instance was in August over here. Although it didn't hit the channel support, but there was also a rebound when RSI hit this level. So, and then the next instance will be around December. It was quite close, around 30. There was also a bit of a rebound coming. So I think personally for Hang Seng, with a retest of these channel support, coupled with the RSI at these levels, I would expect a bit of a rebound to come soon for Hang Seng. Okay, next up is Nvidia. Okay, I think Nvidia currently since breaking out this 500 resistance level, it has been going on a strong run, and then also broke out this uptrend channel over here. So similar to AMD, this is currently on a blow off top pattern over here. So currently, I think bullish momentum is still very strong. Until then it could still continue its strong momentum, then there could be some consolidation afterwards when there's profit taking coming in. Okay, then for Marvel, okay, I think Marvel is also quite strong. So there's actually broke out of this. There was a breakout of this downtrend resistance line over here, this blue color line, and then price has also cleared the highs created last year, which was around $68. So with that, if it continues the upside, the upwards momentum currently, I think it could possibly go and retest $76, where previously there was a swing high resistance that occurred 2 times in February and March 2022. So there could be still some more upside coming for Marvel if it sustains this current bullish momentum. Okay, next up is C Limited. Okay, I think C Limited currently nothing much. Is still finding support around the $35 horizontal support, which it has done quite a few times since November of last year. And recently there was a rebound. So I would expect it could go on to retest this recent support breakdown around the 37.60s, where there could be some resistance first. Then if it continues the momentum, it could go on to see about $40 again, where this is the current range resistance. Yeah, so I think C Limited currently could see some further rebound. It looks like it's rebounding from this range support inside this range consolidation currently. Is 9CI a good buy below $3? So 9CI is a capital investment below $3. So yeah, currently it's below 3. I would think this counter probably it's if you're interested in them, it could be a buying opportunity close to 290, 292 over here. So recently price has been pulling back and there was a bit of consolidation, and I think could go on to test this support level again before some rebound comes in. Yeah, so I think for this counter, generally it has been trading in quite a bit of a range with the main resistance around 313 and above. So I think it's still likely to be in this 20-cent range currently for CLI. Yeah, so that could, if you're interested, it will be a buying opportunity around 292 for this counter. Okay, next one is on Capital DC. Okay, for Capital DC, I think essentially there's some bearish momentum breakdown below this uptrend support line over here, and then price did a retest of the swing low support around 177. So I think currently I would think that the downside is currently limited since the price is holding upon the retest of this support, and there could be some short-term bounce if price can clear this downtrend resistance line over here. But in terms of upside wise, I think there could be some limited upside towards like 185 to 187 this area. So I will expect a little bit of a range trading for Capital DC going ahead. Okay, next one is Fraser Center Point Trust. Also for FCT, I think currently it's generally in a bit of a range bound consolidation over here. Recently price did a retest of this prior resistance area, which was around 220 around there. Yeah, so currently it's seeing a bit of a rebound. For FCT, I'm expecting looks like the range will likely continue. So there could be a rebound towards 230 again to just continue the sideways movement for this counter. Okay, then for Suntec REIT, I think likely is in a bit of a consolidation currently. So the good thing for this counter is that it broke out of this downtrend channel resistance over here. And then we are seeing higher, it took out this swing high around 122 to form a higher high, and it's currently pulling back. So I would expect the current pullback to see some support around 116 over here, which is this horizontal level and breakout level. 160 to 118 likely to act as a support zone for Suntec REIT for the time being, I think. So they could just move in a bit of a range. Yeah, for now, to retest the resistance closer to about 125 to about 127. Okay, then next up for Ascendas REIT. Okay, Ascendas REIT also consolidating currently. So it did a retest of near the previous resistance about 285, now acting as a support, which we saw price rebounded over here. Likely to be consolidating in range between 285 to about $3. Yeah, about $3 to 305 currently. Okay, next up, Alibaba Hong Kong. Okay, for Alibaba Hong Kong, I think currently it's still quite weak in terms of we can see a very clear downtrend over here and so form a lower low recently below this 6680 lows formed in December of last year. So I think if this trend continues, there might be some continued downside towards if it does a retest of this downtrend support line, this blue color line over here, there might be some downside towards like $61 to $62. Yeah. So I think for Alibaba, it might just go down a little bit more or just a sideways for now. I think the strength looks like hasn't come in yet. Okay, next up is Keppel Pacific Oak. Okay, for Keppel Pacific Oak, I think for now it's just a bit of a range consolidation going on. So recently we had a bit of a lower high over here. Retest of the support zone between 31.5 cents to about 33 cents, this region over here. So I think some sideways trading likely first for Keppel Pacific currently, as with most of the REITs currently. Okay, next up is BYD. Okay, for BYD, I think it's still some bearish price action. Resistance from the 215 level as price has pulled back to retest the lows at 197 over here, and looks like currently doing some sideways at this level. So if it goes down a little bit lower, it might go to test the next swing low support, which is around 191 to about around the 189 level. So I think this might hold as a support. So there might be some range bound trading first for BYD at this current area. Okay, then next up is Prime US REIT. Okay, for Prime, I think currently it has pulled back to retest prior resistance, which is around the 20-cent level, the psychological level as well, which was resistance over here in May and June last year, and also November and December before the breakout. So there could be some support coming in at this level, at these price levels currently. Yeah, so I'm expecting perhaps some sideways consolidation first at these current price levels. Okay, is AEM a good bargain now? Okay, for AEM, I think Currently, still some bearish momentum, especially since price couldn't hold this 310 support level over here. And also it broke below this 296, 297 level. So there could be some more downside towards if it does retrace more towards this support between like 270 to about 280 level. Yeah. Then at this level there might be some bargain coming in. I think for AM, another thing is that when I look at the RSI, when it hits about when it reaches about 21, there's historically some bounce coming in. So back in March last year when there was a sell down, RSI hit about 19.7, then following which there was a rebound. Another instance was in August last year. Over here there was a rebound that followed suit as well. So currently RSI about 24. So I think perhaps if you're interested in this counter, maybe if it hits about 21 confluence with this support level, then there might be some bargaining for potential rebound in the share price. Okay, next up is Jiutian Chemical. So I think Jiutian recently retested this downtrend resistance line over here, and we have a pullback into this range. So I think for this counter, I'm expecting price to just trade in a bit of a range now. Yeah, with some resistance around 0.030 and a support around the 0.025 level. Okay, next up is Sasol REIT. So I think for Sasol, is likely to be just range bound consolidation currently. So yeah, price has been range bound for about 2 months. So support is around the 65 cents to about 66 cents level. So quite near the support area now. So we could potentially see some rebound towards like 69 cents if it continues in this range consolidation. Okay, then next one is a Mapletree Peninsula Commercial Trust. Okay, for this counter, I think it did a pullback from this trendline resistance towards the current support around 1.7. Yeah, and then I think the previous resistance of 143 over here will also act as a good support. So 143 to 147 is the current support zone for MPEG. So I think there could be some sideways trading first, as currently is currently in the support zone. Yeah. Okay, next one is Etsy. Okay, so for Etsy, I think currently there's quite a strong bearish momentum breaking below this support around $75. And then also we tested the $69 previous resistance. Now there's some support coming in. So I think if this swing low holds, we might see some rebound towards 75 again to do a retest. Then there might be some sideways trading first. And then next one is CrowdStrike. Yeah, for CrowdStrike, quite a strong momentum currently. So I think it's quite near the all-time highs of about is at 297. So looks like it could do a retest of the all-time highs. Then perhaps there could be a bit of a consolidation thereafter. Okay, then next one is Cloudflare. Okay, so for Cloudflare, I think currently looks like some range bound trading going on. support has come in around $75 mark and rebound. So I would expect to retest the resistance of about 83 to about $87 for Cloudflare to continue this range consolidation. The next one is Berkshire Hathaway. Okay, so for this counter, I think it's in a gradual uptrend over here. But trading in this rising wedge pattern. So yeah, recently it did a rebound from the support at 360 and currently is around 367. So I would think perhaps it could go up to make a higher high, as well as a retest of this swing high close to 370 to 373 over here. Then after that, there might be some pullback afterwards. Okay, next one is a TMO, Thermo Fisher Scientific Inc. Okay, for this counter, I think it's good. Gradually trending up over here. So I think there could be still some upside towards 565 to about 572 about there. So this will meet the highs. This will be confirming the swing highs in July as well as August last year. Also will be a retest of this key downtrend resistance line. Yeah, so perhaps this a little bit more upside over here for TMO. Okay, next one is LHN. Okay, I think LHN has been just a consolidation over here for quite a long time. Potential inverted head and shoulders in the build up. So I think yeah, if it breaks above this 34.5 cents level, there could be some upside towards like 36.5 cents to 37.5 cents level. The next one is iFast. Okay, I think for iFast, generally has just been in a range recently between like 780 and resistance is around 830. So it's been is in a even tighter range recently. So I think for now, likely to be just kept in this range for now. Okay, the next one is Meituan. Okay, for Meituan, I think it's still quite bearish over here. Price is just trading in this downtrend channel. Okay, so I think if it does come down to retest this downtrend channel support, you might see price come to about $59 or $60 before there's some support coming in for Meituan. Okay, next up is UMS. Okay, UMS, I think still currently doing some consolidation. So this is a potential bull flag with in this ascending triangle. So I think it's still nothing too much for now unless it clears above this 135 level. Then it could go towards the highs near 143, which was the previous all-time high. Yeah, so it looks like still some consolidation going on over at UMS. Next one is Valuetronics. Okay, Valuetronics, I think price has been trading this uptrend channel, but momentum has sort of dropped off a little bit and looks like there's some sideways consolidation taking place. So I think could just do a little bit of a range bound trading first for now, with some support around 58 to about 59 cents. Current resistance likely to be around the 61 cents to about 62 cents level. And then next up is CapitaLand China Trust. Okay, for CapitaLand China Trust, I would think that price has retested prior resistance around 84 cents over here. So I would expect some possible rebound towards like 88 cents and then 90 cents perhaps for CapitaLand China Trust. Just to consolidate for a while. Okay, then next up is Ping An Insurance. Okay, for Ping An also recently broke down this range trading range within 32 to 35 Hong Kong dollars. So currently, if it continues the bearish momentum, we could see price go on to retest this downtrend channel support, which might bring it down to B27, 28 over here. Then we might see some support coming for Ping An. Okay, 2330 Taiwan TSM Taiwan Semicon. Okay, for this counter, okay, after the earnings, it was a breakout above this resistance around the 585 level, and currently it's about at 625. So previously around 630, there's a first level of resistance. After which it will be the all-time highs around close to 660. So I think for now there might be some consolidation first at the first level of resistance. Then when there's more support, then it might go towards the second resistance level for TSMC. The next one, 2801, BlackRock Asset Management North Asia iShares MSCI China ETF. Okay, for this counter, it looks like some increased bearish activity trading below this descending wedge. So yeah, I think perhaps it could retest the lows seen in October 2022 over here closer to about 1540. Then there could be some support. But personally, I think in terms of downside wise, I think it's limited since you're quite near to this support. Okay, then this one, 3067, iShares Asia Trust Hang Seng Tech ETF. For Hang Seng Tech, also currently below this trendline support, then it's heading towards this prior resistance, also towards this prior resistance around 640 to 660. See where it broke out from in November 2022. So at this level, there might be some support coming in first. Yeah. Then 3191 Mirai Asset Global Investments is China's semiconductor ETF. Yeah, so currently for this, I think it's at all-time lows. So I think for now, can't really tell where's the next support going to be. But yeah, it's still quite bearish, and we need to see some range bound trading to form first for the price to kind of stabilize. Yeah. Then, but currently there's some resistance around the 33, this level around there. Then followed by about 34.50. Okay, then next up is a TA on venture. Okay, I think venture is still holding up okay in this uptrend channel over here, seeing higher highs, higher lows. So yeah, still okay. Next resistance level to note would be around $14.20 to about $14.20 prior support. So that's first level resistance. Second level resistance is closer to about 14.70. So I think it's still trending okay for now, as long as it stays in this uptrend channel. GXI.D. Hey, sorry, I'm not sure what this counter is referring to. Maybe I'll get back to you later. For this SNR.I as well. Yeah, I'll get back later. Okay, next one is Franken. Okay, for Franken, I think it looks like just some range trading going on between like 126 to about 137. So I think for now looks like some range bound trading first. Yeah, above 137, the next resistance is around 140 to 143. Yeah, so I think for now likely to continue some range consolidation. Okay, I'll take next one I'll take on Singtel. Okay, for Singtel, I'm thinking some range consolidation for now. Price has pulled back from this 246 resistance, this downtrend resistance line, and also currently below this 243 level, which was a horizontal resistance level over here. So, but price also holding around 235. So likely you're gonna see some range bound trading for Singtel for a time being. Okay, next one is ANZ. Okay, currently I think it's at the all-time highs. Okay, I think it's still quite bullish. We have a range consolidation previously, and there's a breakout, and also another range consolidation, and then another breakout. So I think it's still trending well for ANZ. Yeah, if we take the consolidation range and project it onto the breakout point, right? Estimated target could be around 2670, 2680 or AUD. Okay, next one is a FLT. Okay, for FLT, there was a breakout above the 1990 level retest, and then price went continued upside. So I think for now, it's heading into this first level of resistance around 2130, 2140. So there could be some resistance over here. The next resistance level would likely be around 2220. Yeah, so I think for now, could see some consolidation first at the first level of resistance, but uptrend is still intact over here. I think that's all for me now. I'll pass back in time to my colleagues for the other questions. Thanks.
Okay, thanks. Thanks, Zane. So let's clear up all the rest of the questions, then we can end the session. So what about the other question? What about the local consumption story like Sheng Siong with GST increase and high cooked food inflation? Would grocery business benefit? Actually, grocery business we thought would. So I have to turn my camera on. we thought grocery business would actually benefit in okay, so far the supermarket sales has been very weak for the fourth quarter. October and November supermarket sales actually down 3%. So this is probably gonna affect Sheng Siong's fourth quarter earnings. What we are still looking Sheng Siong to grow probably mid-single digit, mainly because of the new stores that they open in HDB areas. They have I think 60 plus stores compared to I think NTUC probably like 200 over. So there's room to grow, but it will just be it will just be gradual pace. But the GST can benefit a little bit because they will everyone has the voucher to use, so that could benefit. But so far fourth quarter numbers are still looking big. Maybe December there could be some front loading of buying ahead of January, but but the underlying demand looks to be weak for fourth quarter. Please comment on or update on Singpost strategic review on business units. Yeah, there's no new update, but I think the key message is that it's only going to be a benefit for Singpost. I mean, that's the obvious. Operationally, we think Singpost numbers will still be healthy because number one, the increase in meal prices only happened in October, so you're going to get at least a 1 year benefit of that. Because Postal was a loss-making business, but once this increase, I think it turned profitable. So that's number one. Number two, their international parcel will also benefit. International parcel means they will collect parcels from all over the world, because mainly China. Then they will all consolidate in Singapore, then get shipped up because Singapore is a hub, then get shipped out to Southeast Asia and US. That is benefiting because flights have resumed to normal in Singapore, and they're moving away more from postal connections to commercial. I'm not sure why they didn't do it earlier, but the one that's holding them back is the weak one is a freight forwarding business. The earnings is probably down like 40-50% because that business benefited from higher container rates. Curiously, it's based on the percentage of container. So they did very well when container rates rise, if you can recall, during the pandemic. Of course, right now it's bounced back up, especially the Asia to Europe route because of the Red Sea issue. But I think operationally in general, Singapore should still do well. But there's no update. But I think if the news comes out, it can only be beneficial to them. We think there could be two ways to review. One is either it becomes like the real business, as you can recall, like SMRT days, or they sell the assets back to the authorities, then they just make a rental or fee arrangement for all the postal assets. That is one. Second thing is they may keep the assets, but then do like what something like NetLink does. The assets belong to you, but how much you can charge, they'll do a regular like 5-year review. So I'm not sure what permutation will it be, but these are the two things. But regardless, is this going to benefit them anyway? And some of the and there's some comments I think it's out in the public. Some ministers have outright commented that the current model the current postal model is not sustainable. They need to revamp it, which means it's benefits Singpost. Okay, so our fundamental view on AEM, I'm quite positive on AEM, mainly because the share price has come down, but for two reasons. Because Intel should still pick up some rebound because of the PC and smartphones. So we think AEM's guidance should be a little bit better. If you recall, they normally give a yearly guidance. Every quarter, they'll give a guidance of revenue for the year. So I think the last guidance was year on year down like 30-40%. So I think maybe my guess is probably up 5-10%. And then the fourth quarter earnings should be weak. So we could get one more sell down after the results. Then after that, I think AM looks attractive, at least for me, because there's a short recovery. And also Intel has two big wafer fabs in Ohio and Arizona, which only started. So only in 2020 and 24, 25, you get the ramp. So you get the benefit only probably late 24. I'm not sure it will be in their forecast. That's something not very clear, but and also, Intel is also looking to move into a foundry business to become like a TSMC mini-me, I guess. So that should also benefit AAM. The only thing I like it because it's been sold off so much. Yeah. So for me, if there's among the three guys, the one that has probably a more visible exposure to AI chips, one of them is also AEM because that is what Intel is trying to push towards to go into the 2 nanometer, 3 nanometer, which is mainly used for high performance chips or AI related chips. Okay, I think is 17 live route still ongoing? Is Temasek still invested? Yeah, I think Temasek is still invested if I'm not mistaken. The Fullerton one is, I think there's more their active management part. I don't think there's any. I don't think anyone can sell or the share price so low and there's no volume anyway. Uh, we have to get back to them and see the latest update. But the part that will grow the most is their virtual live streamer. So 17 round is a live streaming business where like me speaking now because nobody wants to pay for what I say, but right now the growth driver for them is they have the virtual AI. That means it's not AI. I mean it's I don't know, a cartoon image of a person speaking. That's probably the most apt way to describe it. That is supposed to be a big growth driver. If that doesn't happen, then the revenue that's going to move sideways. That we need to get an update from them. But right now, yeah, I'm not sure there's going to be any rebound for now. Not clear for. We will try to meet up with them to get some updates. So sorry, I also don't really have any new news. Nothing new to say for them at the moment. Yeah. Okay, thanks, Emma. I think we answered most of the questions, and thanks, everyone, for your questions and for your patience. It's almost a 2-hour event, so with that, I'd like to thank everyone. Hope everyone have a good week ahead, and hope to see you again next week. Thank you, everybody, for your time and for all your questions. Bye bye.